Well, ladies and gentlemen, that is a good introduction. Let me present the members of my panel here. And I'll start with Gabriel Bernardino, well known to most or all of us, chairman of EIOPA. Bob Ferguson, head Project Innovate of the Financial Conduct Authority in the UK. Christian Mumenthaler, Group CEO, Swiss Re, Switzerland. Technical President of the National Association of Insurance Commissioners, and very importantly, Commissioner of Insurance in Wisconsin. Yep. Very welcome to Europe, Ted.
Thank you.
And last but not least, we have Mario Vela, CEO of GNP Seguros in Mexico. Welcome also to Europe, my friend from Mexico. You can ask questions, ladies and gentlemen, after our discussion. There is the sophisticated way of doing that using the app, which will appear at some stage or has appeared. For those of you who are not yet fully disrupted, you can also ask for a microphone, which will then be delivered to you so that you can ask the question in the normal way. Christian, I want to start with the industry. This panel is about regulation. And therefore, the evident question is, to what extent and in what areas can or does already regulation currently be a barrier to innovation?
Well, I think I need to maybe start with the film and a little bit of background, right? Because there might be a little bit of element of hype here, just maybe you noticed. But I think it's clear, and all the insurance companies I see, that there's today a whole set of technologies and data that together will significantly alter the value chains in insurance. I think that's pretty clear. It's not yet clear exactly how it will play out, but it's quite clear that a few things will happen. I think one is costs will go down significantly, right, in the whole value chain, which is, I think, good for regulators also, consumer protectors. I think there's a lot of power will be shifting to the consumer. That's also pretty clear, which I think is also a positive. I think the processes will become much faster, so claims management, underwriting, etc. That's also pretty clear. It's also positive. And then it's also clear that there's going to be a whole set of services around insurance to increase engagement with the customer and also to lower the risk of the customer. So feedbacks from the car of how to drive better, or if you have something here to protect you, etc. So a lot of, I think, positive things. I can only see positive things. The one which will also happen, which is, I think, more worrying for regulators, is the risk selection. Right? The whole question of how data will help you to subsidize risk, and to what extent is society willing to accept a more and more demutualization of risk. Right? This is something, is a very sexy area with a lot of scientists working on it, but I think this is one of, in my view, one of the biggest challenges from an also regulator point of view, ethical point of view. Now you ask me, where is it hampering specifically? So this is the reverse questions. And my team gave me a whole list. But I think in a...
You don't trust them, by the way.
No, I think I have a brilliant team, trust me. But none of the items was major, in my view. So I would say in first order, I would say nowhere. Right? I don't think regulation today is a huge hamper of innovation. I think everything I said will happen with today's setting also. There's a few areas where it will probably help, right? If you want to have digital signatures and things like that, that will be important. Or if every country has a different regulation around certain sub-aspects, that's going to be hampering it, not making it impossible, but hampering it. You have the whole question of data, cross-border, data in the cloud, etc. So I think there's a lot of areas we need to work on together, or at least you as regulators need to make up your mind. But I think to the question, which is where is it hampering? I'm not saying massive hampering right now. I see annoyances and things that we need to work on, but nothing, hugely controversial.
And if I turn the question around, I mean, you mentioned one area where you believe there should be regulation to regulate the cloud, and are there other areas that you could think of where you believe regulators should be active? And when should they be active?
That, right? I have one very particular worry, and I just mentioned it before, around the difference between what is legally allowed and what is acceptable to the public. And I think a lot of us have heard about the example of a UK company, a motor company, wanting to use Facebook data, which are legally available, publicly available data people put on themselves to derive risk criteria, basically saying, are you a good driver or not, and then price based on that. So that's legal, but it led to a huge outcry in the UK and was immediately stopped by Facebook themselves and also by the reaction of the people. And I think there's a lot of naivety behind a lot of scientists that work in our organizations, in all the organizations, insurance, reinsurance organizations, who see a lot of really cool stuff. They can buy data everywhere. People are happy to sell them data. You will find new correlations everywhere. Yep. It's legal, right? You can check that. You have lawyers, but will it be accepted? And I don't think so. Right? And I don't think so. And I think therefore the industry needs to think about self-regulation. What will be acceptable? What not? I think some things will be acceptable. I think different countries will have different responses to that because the sensitivity is different in different countries. But I'm sure the regulators will look at it sooner or later, right? And certainly I know from Gabriel, they also look into that. So to me, that's serious, right? We need to look at it because I think some startups will not care. They will just go around and just do it. And we might get into, a bad situation for the industry.
Okay, very interesting. Let's turn now to the supervisors. I mean, Ted, we sometimes in Europe distinguish between regulators and supervisors because some supervisors are not regulators, some regulators are not supervisors. So, but let's consider you as supervisors. No, do you recognize what Christian was talking about, or are there other issues where you say there might be a regulatory problem that hampers innovation, or there's an area where we need to do something? Ted, if I can ask.
Sure. First of all, again, thank you for having me over here in Europe. For those that don't know, the original invite was to Commissioner David Maddox from Texas. Yeah. Unfortunately, he passed away about a month and a half ago. It was a terrible but a sudden illness that came upon him, and so you're stuck with me, the NEIC president. The question of hampering business activity and the regulators doing that. I think from the NEIC perspective, from the U.S. perspective, there are a lot of areas where we can adjust what right now is a very rigid regulatory framework, a framework that was developed many, many years ago to take care of traditional insurance, which were forms filed in paper. There's manual review, there's very specific underwriting and rating factors in state laws. A lot of that, I think, is beginning to push up against a lot of the innovative and technological advances that we're seeing. And so I think at least from our perspective, and as you may or may not know, we recently formed an executive level task force to deal with innovation and technology for the NEIC, and members are heavily engaged in it. We've already had an initial meeting and a interim meeting of that committee where we're just simply focusing on innovation and technology and how it's pushing up against the regulatory side. And the effort there is to make sure that our existing regulators in the U.S. get a better handle on all of what's going on, as well as starting to think about ways that the U.S. regulatory system can welcome and embrace a lot of this technology that is entering the insurance space, which ultimately benefits consumers. I think in terms of barriers that I think about, one of the areas is simply the old laws against rebating and unfair inducement that we have in the U.S.
Yeah.
Does a Fitbit for a life insurer or a health insurer which might help monitor somebody's health or their exercise activities does it become a rebate? Does it become an unfair inducement? Does another company say, well, they can't give them that to buy that product? Do we have to deal with that? The Internet of Things, all these sensors that you can put in your house. In cases where I live, it gets so cold that the pipes freeze, and we want to make sure that that doesn't occur. In other areas, they'll detect fire or water. those types of devices given to a consumer in terms of risk mitigation is a good thing, right? It helps the consumer. But under existing rigid regulatory framework, that might be viewed as an unfair inducement or a rebate to purchase that insurance. So we're looking at a lot of these areas that are, again, are set to protect consumers, but I think in the end, they could potentially be hampering, they could be pushing up against and not allowing that innovation to occur in the insurance space. And so our members are looking at all of these sorts of things to see if we can move toward more of a principles-based mechanism for looking at rating factors and for looking at information factors that are available to companies through the use of scientists, data scientists, or aggregators. And I think the one point Christian mentioned, which I don't think anybody around here would have heard 10 years ago, is the scientists at our companies. I mean, that's new. There's data scientists and others working on the data and the data aggregation. That is completely new to from the regulators' ears. I mean, actuary was the big word and still is at many companies, but scientists, that's completely new, and that's a new word that's entering the conversations that we haven't seen before.
Well, that's interesting. Are there differences among the states? Are some states more progressive than others? And where is the majority? Is the majority of the states in favor of, progressively adapting the system, or do you find there is a lot of resistance from some states in that area?
That's a great question, and the reason we developed the Innovation Technology Task Force is we've, for the last couple of years, have seen the amount of innovation going on in Silicon Valley, in Madison, Wisconsin, in Austin, Texas, in the Research Triangle in North Carolina. All of these startups that are trying to break the insurance mold. They're trying to disrupt the insurance mechanism, and the companies themselves that are either buying some of these technologies or implementing them or actually dealing with some of the disruptors who want to get into the business of insurance. And from my perspective, for this year as president, I wanted to make sure that all of my fellow commissioners had access to a lot of this innovation that's going on in the technology and the startups. So this is a full court battle. This is an all-out effort to bring my fellow regulators kind of up to speed on what's going on out there in this space. And I think by the end of this year, I think they will be almost sick and tired of seeing all the innovation that's going on. But it will better and more reasonably help inform their decision-making process when they get to starting to make some policy decisions about where to move forward.
Excellent, very good. Gabriel, from the European perspective, of course, we all know that EIOPA has been working on digitalization, but do you see any regulatory hindrances in European regulation? And again, the same question I asked Ted also, do you see differences between the member states in that space, some more pressing, others more conservative?
Well, I think the first thing, and that's I think already very good, and when we started these discussions last year, we started really to have some convergence in terms of the language also used. And one first thing that I think we have accomplished already is that there's a clear message from our side that we believe that regulation needs to be technological neutral. And that I think it's a good principle that really we want to see then implemented. Now, are there elements in the regulation that need to be fine-tuned? I'm in the side of Christian. I don't see, to be very honest, something completely a blockage point in terms of innovation. Now, I'm quite clear that I believe that there are some elements in the regulatory framework that need to be fine-tuned to deal with innovation. And let me say one thing, which at least from my side, and we heard this morning Sergio talking about what we need is a vision for this. Definitely our vision is that we need to embrace innovation. You know, there's no other way. It will be there. And what we want from the regulatory and supervisory side is to create a framework, a regulatory framework and a supervisory framework that, you know, still has a high level of protection for consumers without hindering innovation. And we have some, you know, concrete elements. For example, the fact, as Tan mentioned, that, you know, regulation was, you know, majorly based on paper in terms of disclosures, for example, in the contact between companies and the clients. This is something that I think at, you know, at short range we will need somehow to adjust, because, you know, the number of people that will be more and more willing to have access to digital means, it will increase dramatically. And I think that is something that we can, from a regulatory perspective.
But would you require it or have the option?
No, exactly. No, my personal view is that at some point in time in this journey, we will change the paradigm, because the paradigm until now is, at least in European regulation, the base is the paper, and if the client wants to have it in a digital way, of course, it should have it. I think we will revert this, because more and more people will be, of course, wanting to have it by digital means, but I think, of course, we need to take care of the people that will be digitally excluded, and of course, those persons, they should have access to the paper. But, you know, from our side, what we're trying to do already, and, you know, taking into account that, of course, the regulation that we are now implementing, like IDD, for example, the distribution directive is still paper-based. What we're trying to do is that in the different areas, when we give advices in terms of implementation, we already take this element of the digitalization into account. And I mean, a concrete example is what we have done for the information document, the IPID, yes, where, of course, the directive was basically asking us to how this can be there in a paper sheet, and we tried already to be compliant with a smartphone. And to give indications on how this can be done. So I think we will see more and more things in this direction. And I think what is important also is that regulators and supervisors and the industry and the consumers have a good dialogue. And we started, as you said, we've started recently in April. We had our first roundtable on InsurTech, and when we had incumbents and startups and consumers and supervisors discussing all these elements, and that, I think, it's very important, because it's new language that is emerging, and of course there are concerns, and when I'm very keen, as you know, of course, of having this element of consumer protection always being regarded. When we talk with consumer associations, they recognize that this can help, can empower consumers, can be positive. Like Christian said, it will drive costs down in many areas, so that's all good. But of course, there's also the risks in there. It's about privacy. Hopefully, with the data protection directive, we can deal, I think, mostly with that. But it's also about fairness. And to be very honest, that's the point where I'm more concerned. And I totally agree with Christian, and we talked already this in the past. I really believe that we need to work on sound and fair principles for the usage of big data. I think that's one of the main things, because what I see around in terms of price discrimination and price optimization, I see some things that said, wearables and all these things. I'm quite positive on this. Some of my colleagues are more negative, but I'm quite positive on this. But I also see some elements in terms of price optimization, for example, where you take into account the information that you get from the social media that indicates that you are a guy that basically, you don't shop around. Your inertia is your state, and then because of that, you have a higher premium. That, I think, it's not fair. And so I think it's on the interest also of the industry to really get the bar at the right level. Of course, this is a societal choice. It is a political choice. What I would like to do is to, and we're going to work on this, and of course, very happy to engage with the industry. That is something that also we want to work also with our colleagues from the US in our EU-US insurance project. I think this is needed.
Yes, but are all the member states on board? Are all the
Yeah.
supervisors is equally eager to deal with that as you?
Well, we had actually, that's a sign of times also. Regulators and supervisors are always late in relation
The
to the market.
conservative
That's for
by
sure.
definition, yes.
Exactly. But it's a good indication because we're putting this really on the agenda as a priority strategically. And since last year, I'm always putting this. This year, the strategy, one of the strategy meeting that we have from EIOPA, one of the issues was supervisory convergence, but the other one was digitalization. And so we have really a good discussion about this, and we are going to do a couple of things. One is to analyze how the different member states and the different supervisors are acting in terms of the approach, be it in licensing, be it in startups, because there are, coming to your question, there's a number of countries that are more evolved, and our colleagues in the UK, for example, are much more evolved in that sense, but others also. And we want to try to get a good assessment of this, but also to bring things to a more consistent framework at the European level, because I think that's fundamentally important, because if we're going to have 28 or 27 in the future.
We'll come to that in a minute.
Yeah, if we're going to have 27 or 28 different ways of approaching big data, digitalization, innovation, that would be a disaster, because this is, by definition, this will be cross-border, and let's be honest.
Good, but Bob, now, it was mentioned 27, 28. You're number 28 still, and you're most welcome to be number 28. But you have this Project Innovate, and I think that you're leading that project, so it might be interesting for the audience to learn a little bit about that.
Right. I'll start by saying why we designed it and put it into practice about 2.5 years ago now. And really for us, it does 2 or 3 things. First of all, it's a way of keeping your finger on the pulse. And I think it's really important. You don't want regulators who are remote or out of touch. I mean, both in terms of risk management and for other reasons. You actually want regulators who know what's going on here and now, what the trends and developments are. So it was designed partly to do that. Then there's the question of all the potential benefits of new technological developments. We can see potential for better value for money for customers through greater efficiency among financial firms. We can see the potential for more vigorous competition and more customer-friendly solutions entering the market. So for these reasons, we wanted to do more than we were doing up to that point. And I guess we also have a philosophy about, everybody's talked about balance, and we have a philosophy which really is, of course, there's got to be balance. But as you identify emerging risks, the right way of proceeding, if at all possible, is to contain the risks, rather than to block or stifle the potential benefits. And we saw Project Innovate as a way of pursuing that philosophy. In terms of what we've been doing, it has 2 main elements to it. And perhaps, if I may, I'll say a word or 2 about the much emulated but also notorious regulatory sandbox.
Yes, please.
And I think the best way I can try and explain that briefly is perhaps through an imperfect analogy. And my analogy is the learner-driver. If you have a learner-driver, you still expect them to follow the rules of the road. And when we have a business in our sandbox piloting an innovative proposition on a small scale to see if it's viable in regulatory and commercial terms, we still expect them to follow the rules of the road. And in fact, we expect them to keep off some roads altogether. A learner's driving license is more restricted, more circumscribed than a full driving license. And so it is with the businesses that we have in our sandbox. And likewise, a learner driver has somebody sitting in the car next to the driver. And that, I think, is analogous to the intensity of supervision that we bring to bear during each sandbox pilot. It's not some kind of free-for-all. It's not some kind of duty-free zone. It's actually a zone of more intensive than normal supervision, literally week by week. Of course, that means it's extremely resource intensive as well. And therefore, I think it's important to remember that the number of innovative propositions that can flow through the regulatory sandbox at any particular point is really quite small. And I need to remind people, actually, it's not the main thing that we do. The main thing that we do is actually talk. We enter into individualized dialogues with people with innovative business propositions. And what we're trying to do is help them understand the regulatory implications of their ideas so that they can be brought to market more quickly than might otherwise be the case. And so that when they come to market, they are more compliant and more equipped to comply than they might otherwise be. And we heard this morning from Guy Farley, who I think's a pretty good example of that, brought by many past, came to our innovation hub in its early days. We entered into an individualized dialogue with them. That dialogue smoothed their passage to the market. All that we want really is for them to get out and compete in the market. So we were not trying to judge whether bought by many would be a commercial success or a commercial failure. Probably that's still an open question even after several years. You know, it takes a long time for a business like that to get into profit. But that's not the judgment that we're trying to make. You know, the judgment that we're trying to make is, can we help them get out there compliantly with appropriate consumer safeguards, and then the market in which they are competing can decide whether they're going to be commercial success or a commercial failure. So what are we trying to get out of it in the long run? Stronger competition, better value for money for customers, but all circumscribed by adequate consumer safeguards. Everybody has to drive by the same rules.
Excellent. Actually, it's very interesting because the UK has been a very interesting testing ground on innovation, and the fact that the UK is probably not going to remain with the European Union is actually a problem. I mean, it's one of those areas where the UK has been positively contributing to making things change for the better in the end for the consumers. And I hope, of course, that the cooperation with EIOPA and so on will continue after Brexit. I think it's very important that is the case. But let's move on to Mexico. Mexico is a huge country, densely populated. And I just read here that you have a fintech law project on the way in Mexico. So you are already starting to regulate.
Yes.
Are you happy with that? What is it all about? Tell us.
It seems that we want to be in the heading the innovation. We were one of the first countries to launch Solvency II.
Congratulations, by the way, for that.
We're still surviving.
Oh yes, I know. Of course, it's good for you.
The fintech law is something that is still in the drawing. It was designed initially for banks, and then when we at the Insurance Association heard of it, we jumped on it, and so we're trying to get our hands into it so that the insurance companies are also considered. And the idea is that this is trying to make the playing field level for everybody. The sandbox concept is probably a little different. It's designed to be more flexible for somebody that's starting to drive. when you have somebody helping you on the way, and it's designed for companies to try to survive, to make it easier for them to survive, instead of being tougher for them to survive. So the law itself is welcome. I think is what it's trying to do is make everybody play under the same rules that banks and insurance companies play. And that is, I think, is a great idea. What I'm not sure of is if it'll help. And this is a question for the regulators, because I think we've always thought that insurance will behave the same exact way that we've always done, and that's not going to happen. I think that we're talking about the Fitbit or the Polar watches or any of those watches. What happens is that if they say, I'll give you, if you have a heart attack, you're wearing one of my Polar watches, I'll give you a $5,000 credit. It's not insurance, but it'll help towards paying insurance claims. And we need to think different. We need to think the way innovators think, not the way insurance thinks. We in the insurance market are very, very conservative. Regulators are even more conservative. Innovators don't look anything like us. And they're going to think exactly how to break our rules to be able to enter the market quicker. The umbrella concept, the mutuality of umbrella, it's not regulated. It's insurance among us. We don't have to fit any of the laws that regulators have. So we have to figure out how do we make these new fintech laws worldwide work for everybody and make the playing field actually level. Today I think that, let's say that Mexico has a more lax law than EIOPA. Then we're going to be able to attract insurance from Europe to Mexico because we'll be able to do it cheaper. And so there will be arbitrage. And we need to figure out how do we make it that the playing field is actually truly level. Because otherwise we're going to have markets collapsing. And I think that at the end of the day, what we want is the market to thrive everywhere. Until 3 weeks ago, in Mexican law required that you sign the application.
Yeah.
No kid is going to sign an application. They're going to go into the website, get insurance online, and voila. And if that's feasible in the States or it's feasible in El Salvador or Guatemala or Brazil, they'll buy insurance from Guatemala, Brazil, El Salvador, or the US. They will not buy it from Mexico. So this lack of a world standard is going to make things very complicated for us. And I think that my first plea for regulators is to try to get something that looks very much alike everywhere. The second is that we need to take out our hats or our chip of conservative thinking and understand that the world changed. It's no longer the way it used to be a year ago, and it won't be 5 years from now. And if we think that we will be able to force Umbrella or Lemonade or any other company that jumps into the market on a very different model than what we're used to, they won't. They will find a way of being above the law or behind the law or in front of the law, but not adhering to the law that all of us insurance companies are in. So I think it's new times. I think that 14, 15 years ago, solvency was a huge challenge. I think solvency is very small compared to what is coming. I think that unless we get the playing field to be similar, we're going to find a lot of arbitrage happening and a lot of the companies trying to fulfill regulation that is going to kill them. And so it's going to create an incentive for insurance companies to do the $5,000 Polar credit that is not insurance. And so I jump the insurance regulation and I do it some other way. So we need to figure out how do we do it so that it works for everybody and it works very similar. In the States, you're going to have 50 states trying to arbitrage things, and you're going to have people trying to buy insurance some other place if it's cheaper because it had some tiny advantage. So we need to figure out how we do this right.
Yeah. Would you consider that this legislative change that is now taking place is coming too soon?
No, not soon enough.
Not soon enough.
Not soon enough. I think that innovation is there. The Fitbit exists. The umbrellas and the lemonades already exist. Today, the InsurTech that we've seen in Mexico is more focused on how do I help you underwrite better, how do I help you sell it through robots. But an example of regulation that has stayed behind, at least in Mexico, is there's no regulation on how robots need to sell. There's regulation on an agent having to be certified, pass a test, and get a license. But there's nothing on a robot that you can sell today online. And there's chats where you sell already online, and it's not regulated. So we need to figure out how we do these things, because it's already here.
But I wanted to come back because Christian raised this very in the beginning. I think it's a very important point when you were saying to move from A to B is not easy. I mean, there are some things which are acceptable, non-acceptable. People's mindset will change. And my question to the supervisor is, what can supervisors do without changing the law to make some of these technological changes, like the introduction of robots and so on, still a workable proposition, even though the law doesn't specifically say you can have a robot or what have you, but to allow these changes to take place before there is a law that actually puts things on black and white. So Ted, how do you see that in the US? Can supervisors do something in the way they interpret things, or what would you think?
It starts with a conversation. It starts with regulators, consumer groups, disruptors, insurers, all talking to each other, understanding, and it can be one-on-one conversations, it could be group conversations, depending on the issue. But if the regulators and the disruptors, if the regulators and the companies are not talking about extra benefits that might be associated with a particular product, and then they just show up on the scene, I think that tends to be problematic. If there's a good conversation that goes on between all the groups involved, you alleviate a lot of potential issues. Particularly on the regulatory side, we have been talking to a lot of the disruptor companies that they have one goal in mind. It's to find venture capital. It's to do the next big thing.
To make money.
And make $1 gazillion and then get out.
Sure.
And most of them fail. But again, there's 1,500 of them toiling away right now in Silicon Valley, along with lots of other ones across the country. They all are just there for one reason, and it's to get rich quick. And that's all right.
Yeah.
It's the American way. But for us to engage with them, and they have on their part engaged with us on little things and big things that can go a long way to help them get around some of these difficult issues that in the past they would have just blown right by and said, well, I'm just going to do whatever I need to do. Okay. So that conversation is key, and that's again part of the effort we've got this year going on to bring innovation and technology to the regulators themselves.
Gabriel, how do you look at it? Would you consider it possible that EIOPA would issue a kind of a guideline or opinion or something like that, helping the supervisor to become less conservative?
No, guidelines know that nobody likes guidelines, so don't
no
tell me
guidelines.
to do more
Good
guidelines.
guidelines, you know. Listen, people want good guidelines.
I think what Ted was saying is particularly the important point, and I see that also what Bob was mentioning, because the difficulty for a supervisor, of course, is that, you know, the traditional insurance companies, they approach us, of course, if they want to be in the business, they need to be licensed, they know the criteria, they know all of that. Now, we need to approach also and to have a process to monitor what is happening in the market, the other type of startups and companies that are, of course, trying to either disrupt or take a part of the value chain and to do it differently. So this element of the dialogue, I think it's particularly important. But one of the things that we're going to do, for example, after this discussion that we had, was very clear that we invited a startup to make a presentation to our board on, and it's a peer-to-peer business, and immediately we started discussing, and some would say, oh, but this is not insurance, and you say, of course it is insurance, and so this is the most basic things, and so what we start to do is to look at concrete cases in the different countries around in Europe to see how can we, from a more consistent perspective, look at how are we going to approach it and to try to have some guidance in terms of how a more consistent basis to look at that. And I particularly think that all these initiatives, like sandboxes, and there's other type of initiatives in other countries, slightly different, but they all go in this direction of trying to get the reality, monitor that reality, and try to help in making these companies entering into the system in the right way. I would definitely not like to go in a direction where we see light touch supervision on this. I don't like particularly that. I think that we have, in terms of the regulatory framework, we have in many areas sufficient grounds for proportionality. Yes. And I think that in relation to this type of businesses, I think that a lot can be done with proportionality. Also proportionality in the sense of, making them enter into the business with, kind of growing, a pattern towards fulfilling the requirements at the end of the road, but that you have some elements of proportionality while you build this. And I think that this will be positive not only for the startups, but also for the incumbents, because also, of course, all the incumbents are also buying startups and having their own experiments. So that's what I would like to have, to have a more consistent way of supervisors around Europe with proportionality to look at these realities. And that I think we can do from a supervisory perspective. Now, there will be other things, like what I talked about, these ethical principles, for example. I think that will need to be decided at the political level because it's a societal issue, but we really want to contribute to that.
Yeah. Very good. Paul, would you share that view?
Yeah, I was nodding my head
yes, I didn't see that, but
vigorously and 100% agree on the observations on proportionality. I think different countries are in very different legal situations. And I think in the European context, by and large, we regulate activities, and therefore it doesn't really matter
who does it. Yeah.
Whether it's done by an incumbent or whether it's done by an upstart. If you're barking like a dog and wagging your tail like a dog, then you are engaged in you're engaged in canine activity. Sure. Yeah. And if we regulate canine activity, that's that. So a lot of this is I mean, what we find is the most common question that we're asked actually is, do we need to be regulated?
Okay.
And surprisingly often, the existing legal and regulatory categories are actually capable of absorbing the innovative proposition that is being described to us.
Yeah.
For example, automated advice. I think we're absolutely clear that if you give automated investment advice, you're going to be subject to exactly the same regime as a human investment advisor. And an automated system is going to have an owner. And that owner is whoever is proffering the system to the public is going to have to take legal and regulatory responsibility.
Okay. Christian, listening to that, are you happy now? Do you think they're with me?
I wasn't unhappy to start with, right? As I said, I think there's going to be massive changes, and I don't see regulation as a major issue. Clearly, the biggest worry would be the data one, and maybe what he mentioned, if people found ways to be not regulated at all, right? But I think you will figure out. I'm not too worried about that. But that obviously would be bad, right? If you let new people come in who give guarantees or something that is not considered insurance, but is insurance, right? But as you say, right, in the European context, that's solved, I think.
Let's move on maybe to another topic, Christian, for you, because you're one of the 15, it says on my page, 15 insurers that are part of the Blockchain Insurance Industry Initiative. Yeah. What are the results of that? Are they positive?
Well, first, maybe the background of this, right? So blockchain is another hyped sort of technology or methodology, and in reality, it's not that sophisticated, but when we studied it a while ago, we came to the conclusion that there's probably no competitive advantage that Swiss Re on its own can extract from it, but that the whole industry could profit from implementing it across industry. And so very quickly we reached out to others who had come to similar conclusions. We started with, I don't know, 3, 4 major insurance companies, and then we had a lot of interest by others to join, right? And basically the idea is, can you make the whole system much more efficient with contracts? So they've agreed on something very pragmatic. So we had already the Accord effort, which is a, I don't know, 20-year effort by brokers, insurers, reinsurers to standardize data. So we use this as a background. And you take a Cat XL contract, a normal Nat Cat XL contract, reinsurance contract, to try and test everything through with one contract. How would it move between insurers, brokers, reinsurers, etc. And so the plan is by Monte Carlo, we should be able to come out as a group, which is, by the way, growing all the time. So it's not a closed club. It's more, is quite open. To come out and show what it is. I don't think that by 1/1/18 it's going to have any major impact in the renewal or so, but we'll see where we go from there. They try to do something sort of small and realistic to test. I think we're in testing mode.
Okay, are you following that also at EIOPA?
Well,
blockchain?
We're trying to follow, of course, all types of innovations. Actually, in this roundtable on InsurTech, blockchain was on one of the panels in there, one of the discussions. I think it's promising, some of the things, and especially on, I would say, in terms of this claims processing element. I think it's quite promising in terms of having a much quicker and simpler and transparent way of assessing information. I believe that also in terms of the claims management, this could be also helpful. And if you look at the combination, that's at least what I've been reading and talking with some people where it seems it could be promising, is the interlinkage between smart contracts and the blockchain. Because smart contracts, in the sense of this kind of very standardized parametric kind of contracts, and then having a blockchain to basically use that as the, using this ledger distribution technology to have that as the framework of the contract. That can be, I think, definitely an interesting way to go. But I think it's very important also, and by the way, not only on blockchain, but on all the other areas of innovation. And someone mentioned this morning, and I think that's a very positive signal. To see it always, not only from the side of cost effectiveness in the institutions, that's positive, that's good, of course, if it is repercuted then at the end in the price. And there's areas where insurance needs to have that cost effectiveness, that's for sure. But especially to look at from the side of the consumer, what can you bring also to facilitate the life of the consumer? And for example, in blockchain, I know that there's an idea, I don't know if this is already being developed more or not, of, for example, using blockchain technology for the currently situation of this claim settlement, the claims history that you've got from when you go from one company to another company or motor insurance. If you can put that on a blockchain, that will facilitate tremendously, not only for consumers, but also for the industry itself. So I think that there will be a lot of possibilities of using these technologies in a positive sense, empowering consumers, making things more transparent, making products also more simpler, which at the end of the day, I think it's what...
And making the process go more quickly.
Go more quickly.
That is very important.
So that I think is quite positive, and I'm quite positive about that.
Ted, would you share that view?
I would share just about everything Gabriel said. And again, from the U.S. perspective, the NAIC perspective, our think tank, our Center for Insurance Policy Research, has spent quite a bit of time working on the blockchain issue, doing research on that. The technology itself and similar technologies has probably an infinite amount of possibilities, and so we're even thinking about it from our association perspective. Given the fact that the blockchain provides a lot of privacy and a lot of security that is not necessarily there when you're passing data around in other ways. But even thinking about hooking all the states up to a blockchain with NAIC, as we share data back and forth, insurer data back and forth, and we do our own analyses, of it is something we're thinking about. And I'm even thinking about it from my own state level. Governments could be better at the way they share data as well. So we're looking at blockchain for sharing data within state government agencies as well to kind of go through, make quick decisions based on data submissions. So it's an interesting technology. It's very appealing, and we're looking at it again from a variety of levels.
Good. Mario, is that also in Mexico an issue, blockchain?
It's not yet. I think it will be positive. We can use it as an insurance association for everybody to make it simpler. It'll be welcome.
Good.
Maybe
Christian, yes.
also as the dream some people have, right? I think this is far out, but just to say where it could go, because this was just a short term. I think some people think that ultimately every single contract at the consumer level could be digitized and logical, which means that you would constantly have all the data as an insurer. You could even have that sort of public, not the names of the individuals, but what it is. You could think about capital markets bidding for it all the time. So the owner of it could change over time. The distribution for the market would change. If there's a claim, the whole system knows there's a claim. You pay immediately. So you can imagine just some people dream about that, but you could imagine a huge revolution, right? Something that is completely different to insurance, reinsurance, capital markets, but something where you trade it and where you have these packages of individual, the risk assessment factors, the conditions and all of that, but it's basically public and uncorruptible, right? You cannot corrupt it. So, but I think this is 20, 30 years away. This is a long time away. It's not for the next 5 years, but that's a bit one of the visions. But we start with the easier bit, right? Reinsurance and where you have fewer players, where it's less sensitive and all of that.
Yeah, but I understand that you are doing at Swiss Re some innovative research where you use behavioral economics, which is, I find that very interesting. But do you see any regulatory issues there? Or do you think you can go ahead with your research? Nobody's going to stop you? Well, nobody.
Yeah, no, it's I guess it's not completely related, it's somewhat related. So this is more the last 3 years, for everybody's benefit, there's been a lot of research around behavioral economics, right?
Yes.
And studying the human being in situations.
That's what it's all about.
And basically come to the conclusion that humans are highly irrational beings, right?
Yes,
we found out now with science what we all knew before.
Yes.
But it explains a lot in insurance, why people, when you rationally ask them, they have the money, they would like to buy it, etc. In practice, they don't buy. This is one of the biases. So the biases are very known, and there were books like Nudge. The UK government is using some of these techniques. And because big questions like, do you give your organs if you die? You have this opt-in, opt-out bias we all have. The question, everyone can say yes or no. So you should have the same answer whether you opt into the system or opt out. But you don't, right? We observed that in Switzerland, you have to opt in. You have to say, okay, I agree to give my organs. 20% do that. In Sweden, you have to say, I don't want to, because it's opt-in. And 20% opt out, which means 80% say yes. So you have this huge delta in outcome, which saves lives. And it's only a question of this behavioral economics. So in the UK and other governments, they will look at that and think, okay, how about changing opt-in, opt-out, and et cetera, et cetera. So our team of psychologists, what they do is they help insurance company optimize some of their processes. So how do you get more people through your website? How do you lose less people through an email? And you do ABC testing, right? So it's basically what everybody does all the time, right? Except that it sort of is more consciously thinking about what are the biases we have, etc. We have internal ethical principles around that, because you don't want to push people into a choice we wouldn't recommend to our friends, a bad choice. So I think there is an element here to be careful about. But I think a lot of it is what is happening all the time, every day anyway, consciously or unconsciously. And as I said, right, the governments are also using it. So I think it could also be a great benefit to humanity to have more people give their organs, or more people being protected from earthquakes. Yeah. In California, where only 10% of people buy the policy, even though they know earthquakes happen, right? And this all has to do with that. And so I'm a believer that it's a very big net positive, this whole recognition of the irrational nature of humans.
Yes, it has a lot of implications if we think about it, because a lot of regulation is based on rational behavior. I mean, it starts with standard models and things like that. It's not so evident. But let's move on to a point that several of you raised earlier on, is about this level playing field. I mean, we see these developments taking place, and we can try to deal with that within Europe, within the US, in Mexico. But in the end, I mean, Christian, you are an international player by definition. A reinsurer is an international player. So how can we sort of prevent things from falling completely apart? Because on innovation, the conservative trend will outweigh the sort of innovative trends. What can or should be done? Who should be the players? What action should be taken? Should that be with regulators? Should be the supervisors work with the IAS? How do you see that? Maybe Gabriel.
I can start. Well, I think that there are areas which, on which definitely we will need to have the emerging standards internationally. I think that, for a lot of types of business that we're talking about in terms of completely digitalized business value chain, its borders are not there anymore, and also if you think about how can you control this from a supervisor perspective, if you want to isolate yourself. Sorry, the internet is there, and it's going to be very, very complex unless we want to start to, to have internets completely focused only on each one of the countries. So I think for those type of elements, we will need to have more and more, I think, international standards emerging. And on that, I completely agree. Actually, in the context of the IIS, we started already to have discussions also on digitalization. We have a paper where everybody around the world, of course, contributed. And this is something that is not happening only in one place in the world, or either Europe or US or whatever. No, it's in Asia. There's a lot of innovation and digitalization coming. There's countries like Singapore that have really focus and plans and frameworks on this. So I think we can benefit from all of that to try to have more consistency at the international level. But then there will be some issues, and especially I think where you enter into, and that's where the problem I think it will lie, when you enter into issues which are tremendously societal values in terms of consumer protection. There, I think it will still be some time to get a higher level of consistency. You will continue to have some differences, and for sure, because in different regions there's different also perceptions about the levels of usage of data, secrecy, fairness, etc. So that I think will be elevated, but still for a while I think that we will still have those elements which will be different.
How would you in the future then define home and host supervisors? Who's going to supervise?
Yeah,
I would be very worried if I were you.
Yeah,
I would be very worried.
Yeah, but the way that of course we're dealing with it right now, it's basically on a vertical axis. It's on institutions. I think that we will need more and more to look at activities.
I
think that's
Bob was saying. Yes.
That's going to be I think the future, not only from a regulatory perspective, but also then from a supervisory perspective. I think we will need to combine those things, and again, I think that international cooperation will need to be more and more developed also on the supervisory side. I think that's a given. Even if you have political decisions at some point in times in our jurisdictions going more isolated or less isolated, I think that the reality is there, and we will need to deal with it. And the reality is that this is global.
Ted, you agree with that? Because sometimes we hear that the US doesn't want to join these things anymore.
That's just because we're right.
You're right.
Kidding.
Wrong.
Just kidding.
Exactly.
No, I think the idea of number one, having bilateral discussions with other countries, and then having those discussions continue on in groups such as the IIS, where it is a global conversation about either standards or at least mutually recognizing regulatory regimes cross-border. The importance of supervisory colleges has never been more significant as it is now. And we as chief regulators need to be involved in those processes, and nothing against senior staff, but not just sending senior staff. It's got to be the supervisor, the key supervisor.
Very important, yes. Very important.
Involved in those discussions.
Yes.
So I've made it a priority to do what I can to make the three that we're involved in. But it's at the end of the day, to Gabriel's point, you're going to have differences. You're going to have local differences, local nuances, local approaches, which shouldn't be discarded. They should be recognized and supported and understood by other jurisdictions, so that at the end of the day, you've got principles that we can all agree to and agree on that help companies work more smoothly cross-border and from different jurisdictions, and then work with those individual jurisdictions. Regulators need to work together in those individual jurisdictions to try to iron out some of those issues that we still have differences with. And I think the local data presence issue is a big one. Local reinsurance is another big one that we've been working on a lot. Those kinds of issues can be addressed through larger discussions, and then as well as bilateral discussions. And we're not there yet. We're not, as regulators, we're not perfect, and I'm sure there's agreement in the room on that. But we really do, our heart's in the right place, and we're working on those things.
Did you hear that, ladies and gentlemen? The heart is on the right place, the supervisor. That's a very important message. Bob, how you see this development? Of course, at some stage you will become a third country, and that, of course, will raise the same questions of cooperation. But I can imagine these technological innovations, if you look at purely from a national perspective, it's a disaster, isn't it?
For a moment there, I thought you were going to say third world country.
No.
I think I heard it.
Still nice to each other, you know.
I think it's really difficult, isn't it? I mean, the logic of digital business is global.
Of course, yes.
And obviously, as supervisors and regulators, you know, our impulse is to construct standards and cooperation that correspond to that. On the other hand, we're all at the mercy of.
Yes.
We all come from nation states. Some of us come from federal jurisdictions. We're all at the mercy of politics, and I do worry that actually, you know, there appears to be a trend towards balkanization, rather than in the other direction. And I don't know what the answer is, other than to try and sustain channels and mechanisms of collaboration, cooperation, communication, and do our best.
Okay. Well, Christian, do you have a message to these supervisors, you know? Are they, when you listen to them, do you find that their heart is at the right place?
Oh, that's easy to answer, yes.
Okay.
Yes. But I don't share the optimism, right? I'm not sure you share the optimism, right? I think, obviously, Swiss is a global player, and we have been global for a long time. We believe in that. Countries like New Zealand were saved by international markets, right? These are 4 million people. The claim was more than 20 billion. Their GDP wouldn't have it would have been a complete disaster if there hadn't been international reinsurance markets. And yet, the whole tide has changed. I mean, you can see it. For 20 years, 30, 40 years, right, there's this globalization wave, and people said that's the right thing to do. We do Solvency II, we spread it, we do all of that. And it has changed, not just the US, it has changed everywhere. So we see renationalization, we see Indonesia say we want a local reinsurer, which makes absolutely no sense. We see people, closing their borders. We see this whole thing, which in the end I think will harm the human beings in these countries. But it's a meta trend, right? You can see it. And so whether we have tech harmonized or not, this is not the biggest issue, right? It's also an issue, and maybe we get some harmonization. But I think the other trend is much more worrisome, and I'm not optimistic. It's the force seems to be very strong and very deep, and I think the heart is in the right place here, because you have all been talking to each other on the international field, but that's not necessarily the reality in the world today.
Mario, what is your view?
I'm happy to hear that the regulators are willing to talk among them and get closer. I think I think this type of event puts us as an industry and regulators closer together, and I think that has to be a must from here on out. We have to be very close. We have to be aware of the changes in the market, and we have to work together towards making it a better place for everybody.
Okay. Gabriel, I got a question here from the audience. Is an EU-wide regulatory sandbox coming anytime soon?
Well,
That would be an interesting challenge.
Yeah. Let me say it like that. We are exploring, kind of three possibilities. That is the last one in there.
Okay.
It's still a dream, but we're starting, as I said, looking at what we have out there and building common, trying to build common and consistent principles on how to use this proportionality in the authorization processes and the way that we deal with new companies. If from that something will emerge in that sense, let's see. I'm usually positive, but I see some difficulties, of course, also on that, because we still have, especially in the consumer protection area, we still have quite entrenched different types of regulatory frameworks that will be a little bit difficult to have all of that. But I think it's a step by step, and at least I think we should all try to work together in that sense, because the worst that I think it could happen for Europe, right now, thinking on Europe itself, and for the businesses also in Europe, is that on the other way we will diverge and have 27 different approaches, because that I think it will be a killing. Because this type of businesses, one of the things that they need also to flourish is the element of scale. It's scale.
Yes.
So if you have a business that by nature it's much more, it's digitalized, and so it can benefit from scale. It can benefit consumers also in that sense. It will be awful if regulation and supervision will basically make that impossible. And I think that element in terms of the competitiveness of the European industry that will benefit at the end of the day consumers. I think that we should take a look at that, and we should be positive in that sense. So that's my intention.
Isn't the answer actually that as long as we don't have a real internal market,
Yeah.
which means that our cultural traditions will be more assimilated,
Yeah.
that consumer protection in France and Italy and in Sweden and in Germany would be sort of similar.
Yeah.
Isn't that a precondition to having
Yes.
such a market?
And on that, Carol, maybe I'm going to say something that I probably later will regret, but
Yeah, but I love to hear these
don't
things.
care. Yes. I really see this movement of digitalization as the game changer in terms of the internal market and in terms
Very
of
good.
making,
I like that.
in terms of making consumers at the center of the insurance business.
Voila.
And if it doesn't work with digitalization, then it will not work with anything else, because I think the basis for internal market and for people, of course, circulating around and buying, they're there.
Yeah.
This is the basis. Now we need also, in all levels, and politically, then with the regulators and in the Commission, and then of course also EIOPA and supervisors, to have a clear vision of what we want to achieve, and not being, I would say, so stuck with this nationalism that sometimes kills us as Europe. And that's why I'm proposing the PEP a number of
I know.
years ago, and hopefully we will get there. And digitalization, by the way, can help a lot of
Yes. Did you
having
tell
a proper
that
PEP.
to the Commission in its consultation?
Yeah, of course, but
Excellent. Very good.
all of that.
So I hope the Commission
We're going to
is
answer
listening.
to the consultation of the Commission, and we'll touch on that.
Very good, very positive. There's another issue raised by somebody in the audience, which we haven't touched upon, and I think it is very important. We're talking about cooperation between supervisors, but we're entering to a field where there's different types of supervisors involved, like data protection
Yep.
supervisors. And my question to you all is, how do you see that evolving? Are you talking to these guys, or are they living in a different world? Do you know their address? Bob, may I start with you?
Yeah, no, I think that's a very shrewd question, actually, because as we discussed earlier, data is at the core of what is happening and what is going to happen. And therefore there are legal and regulatory issues that straddle two lines of regulators, the data protection regulators on the one hand and the conventional financial services regulators on the other. And we have been talking to our data protection counterparts in the UK, and my view is absolutely that there needs to be a tighter integration.
Did they understand you when you were talking to them?
Up to a point.
Up to a point, yes.
But every organisation has its own mandate, its own priorities, its own resources, and so on. So that dialogue continues. But I do think, from the point of view of the consumer, and indeed from the point of view of the financial business, it's really important that there is a tight cohesion between data protection, regulation, and the stuff that we do.
Yes, Gabriel, how is that
No, we
operating?
are in contact with the data protection authority there now in Europe, of course, and we're definitely contacting them and trying to see what we can do together, because of course now that the general data protection regulation is going to be implemented next year. There's still a number of issues in terms of interpretation that are going to be very important. For example, for profiling. So we are in contact with them and trying, of course, to have to also pass the message of how we see this from an insurance perspective and from an insurance regulatory perspective. So that is fundamental. And actually, I think that it's going to be even more fundamental in the future, because we will need, that's my vision, I think we will need to have close cooperation with them also in terms of the way the supervisory plans are made at the end of the day, because they will have also the responsibility to supervise the implementation of this in day to day. Of course, from an insurance supervisory perspective, we will also be very interested in terms of compliance and implementation of governance, etc., on how these things are implemented. So we should avoid duplication and to have a good cooperation with it. So it's a new challenge, definitely.
Yeah. How is that evolving in the US then? Because in Europe, data protection is a big issue. I mean, it's a real big issue. Some countries even more than in other countries. But I understand in the US you are more relaxed about that. Or is it also changing?
Well, it starts with privacy.
Yeah.
And so we start with just individual privacy. And I think from the regulator perspective, we have been looking into the issue of big data for several years now. We've merged that work stream in with our new Innovation and Technology Task Force, because there's so many interrelationships and interactions there. And I think from a regulatory perspective, from a U.S. supervisor perspective, we already have a significant amount of authority over the use of data by companies. So we're pretty much attacking it and looking into it right now from the supervisor perspective, just talking to companies, talking to data aggregators, scientists as to what they're collecting, how they're collecting it, how they're using it in terms of underwriting, rating, claims paying, et cetera, and getting our arms wrapped around it from the supervisor perspective. So I think that's where we've taken the first
So you
cut
have
at
the
it.
authority. You don't have a special data protection authorities that you have to talk to?
We haven't gone there yet.
Okay.
We're just focusing on it from our own perspective.
Okay, so you're lucky you can talk to yourself. That's
Yes,
always,
we talk to ourselves a lot,
makes-
and we agree quite often.
That's great, yes. And you're always right, so that's fantastic.
Normally.
Yes. Well, Christian, if you, that's of course from an international perspective. If the data protection rules are different, how can we make progress? How do you see that?
Well, as I said in the very beginning, right, that's one of the issues I think that are potentially hampering it, right? If you can collect a lot of data and make conclusions, if you have to store the data locally, you can't share it, you can't use it, etc., it could be that it hampers progress in some areas, clearly.
Yeah. Okay.
But it's just one of the issues, right?
I still would like to ask whether there is anybody in the audience who wants to disrupt the proceedings by asking the microphone for a question. That's still possible. That is not the case. I don't see any disruptive move in the audience. Well, let's then maybe go a little bit more in the direction of regulation in general, because we've been talking about regulation. You say it's not necessarily hampering the progress, but what is the role of regulation? Because at some stage, something needs to be done, I think. And what are the messages you would like to pass to the regulators? And Christian, I start with you because you started to talk about that. So.
I risk repeating myself at this stage, I guess. Yeah. So I think maybe wishful thinking, but one is clearly to harmonize as much as possible in countries. I mean, you mentioned it. That's clearly a problem for a lot of companies, the bigger ones, right? To try to have some minimum consensus around. Then I think to think about the cloud and how you want to deal with that, because that's squarely against a lot of the thinking we have today, right? And yet I think a lot of companies are moving the data to the cloud, right? Inevitably, right? This is just happening as we talk. So what does it mean? And then things how to simplify process, I guess, for the primary companies, not so much for me, but everything about digital signature, everything that today is complicated in a process because of law, I would look at that and try to get rid of it as much as possible, right? Make it simpler for consumers when it's justified. So I think that's just a few.
And in Switzerland, do you think that do you believe there needs to be changes in Switzerland in the regulation?
Actually, I think the Swiss regulator has taken very early on that says technology neutral. I said it is a great principle. Mm-hmm. And then for banks, they've come up with an approach where they say it doesn't matter whether you're a startup or a big bank, but if up to a certain level of size, you have a simplified regulation, I think that makes sense, right? If you want to foster innovation, but it's the same whether UBS creates a subsidiary or whether you have a startup, which I think is important. It's a level playing field, so you can test certain things. So I think personally, I think the Swiss have been extremely clear and pragmatic, and it works well. Yeah.
Okay, Gabriel.
No, I just want to come back to that point of the cloud and the risks, because we're talking also a lot on positive things, but of course there's also risks, and not only for consumers. And I think that this issue of the massive amounts of data that, by the way, not only in insurance and on all the financial sector, are being now put in the cloud. I think that creates a number of issues. The first one, of course, it's in terms of localization of the data, in which, from a supervisory perspective, of course, this is quite a relevant issue. But for me, it also, I'm worried with the possibility of cyber attacks to the clouds, to be very honest, because with the amounts of data that are there, I think that this will be a target, an easy one, and everybody is telling me that don't worry, because the guys that run these clouds are the best in the world, the best technological firms, etc. But if this happens, this could be systemic. Can you just imagine, the amount of data that from banks, from securities, from insurers are in the clouds right now? This could be quite a massive disruption and really a systemic event. So I think we need really also to look a lot to that. And I'm not saying that, of course, should discourage companies from, using an efficient way, of course, of dealing with the data and the storage of data. But we need to go up to the end of the cycle and to see how can we also have, from an operational perspective, also all the possibilities and all the elements in there to have a good management of this and to avoid, to the utmost extent possible, this kind of systemic situations. And this is something that we have been talking, and we continue to talk a lot about, of course, internationally, about systemic risk in the insurance side from a completely different perspective. But we need also to look at these other situations of possible systemic risks that could appear.
Yeah, the question is, who should regulate that? Because when I fly in an airplane, I've been looking at my data looking at the clouds, but I haven't found them. So I don't know where they are. So the question is, who is actually going to regulate the clouds? And that is not going to be easy. So ladies and gentlemen, at this stage, the only thing that remains is to thank the members of the panel for their excellent contribution. Please join me in doing that in the usual way.